Last week, we got the latest FOMC rate hike, and the most valuable stock, Apple, reported its earnings. And at the end of all these, the S&P 500 finished near the level it was right before the FOMC announcement. So who is going to blink first? Welcome to another S&P 500 analysis. Today is May 7, 2023. Let me cut to the chase and set up the picture before we go and look at the indexes and the internals. Here's Apple. It is 5.1% from its all-time high, and here is S&P 500, 14% from its all-time high. So who is telling the truth? Before we try to answer that, let's take a look at how the indexes performed. For the week, the Dow Jones Transportation was the best performer, gaining 101 points or 0.7%. The Nasdaq 100 gained 0.1% or 13 points. The Dow Jones Industrial is the worst performer, lost 424 points or 1.24%. So for the week, other than the transportation, the market as a whole was down. The Nasdaq was up mainly due to Apple 4.7% gain on Friday. And here's how the S&P 500 did last week. It formed a bearish engulfing candle here, and also it had a range of 138 points, lost 33 points or 0.8%. It closed above the 10 and 40-week moving average, and it is still trying to break out of this 10-month trading range. Now let's take a look at the sentiment. We see that the VIX is still below the 20 level. It closed at 17.19 on Friday, but the put-call ratio is still inside of this 1 and 0.7 zone. Although the market participants are not really fearful nowadays, but they are also doing a lot of hedging. And looking at the internal, as you can see on the up-down volume ratio, other than on Friday, the other remaining part of the week was mostly down. And on Friday, there was an impressive rally with 8.1 to 1 in favor of the up volume, and also the daily advanced decline, similarly to the up-down volume ratio. Other than Friday, the whole week was led by the declining stock. And on Friday, there were 2,106 more advancing stock than declining stocks. And looking at the new 52-week low versus 52-week high, not much have changed there. The new 52-week low still outnumber the new 52-week high. And the cumulative AD line continued to form negative divergence for the market to resolve. You see that right now form another new negative divergence here as the cumulative AD line making lower low, while the S&P 500 is putting in a higher low. And not much different in the Nasdaq market. The Nasdaq market also show a mostly negative week other than Friday with a 4.7 to 1 in favor of the up volume. Similarly on the daily advanced decline other than Friday with 2,122 more advancing stock than declining stock. The remainder of the week was pretty negative. And the new 52-week low still outnumbered the new 52-week high, so it's pretty much the same story at the New York Stock Exchange. And here looking at the cumulative AD line for the Nasdaq market, that is getting really ridiculous right now. You see this AD line actually got below this pivot low here back in last December. So we are talking about the Nasdaq 100 down here near the 10,600 level. And right now it's sitting at 13,259. So there are quite a way to drop here to resolve this negative divergence. Now let's take a look at the price action, starting with the S&P 500. You see that topping candle right here got a reversal, and also we got a continuation drop on Thursday after the FOMC announcement. And on Friday, we had a pop initiated by Apple on a post-earning move, and you see that it came up and salvaged the week mostly because otherwise it would have been worse than what it seemed or what it ended up. So right now, we're basically looking to see is the S&P 500 be able to come up and push about this 4174 area, get into this zone and test this 4200 level. And this is in confluence with this week's upper range. Or would it come back down and test this lower range of the weekly expected move between 4073 and 4045, then proceed down and fill these gaps down here. So those are the things to watch for the coming week. And for the Nasdaq 100, we're also seeing the Nasdaq 100 got a nice pop as well, but it's still shy of this pivot high here from Monday. So we'll see, will it be able to continue to push up and take out this 80% major move of this bull flag here that we are monitoring, or would it resort back and come back in, dip below the 13,000 level and come back into this balance area. And the weekly expected upper range is somewhere between 13,525 and 14,496. I mean 13,496, and also the low range is 13,021 and 12,920. So those are the two ranges to keep an eye on for the coming week. If it's able to move up and try to trace out this 80% major move of this bull flag, then look for the upper range to get tagged. But it decide to pull back and try to dip back inside of this balance area, then look for the lower range to get tagged. And for the Russell 2000, we'll still continue to monitor Russell 2000 to come down and break this 1697 and dip down to this lower end of this balance area, somewhere around 1642. And for the Dow Jones Transportation, we see the Dow Jones Transportation cut back above this trend line here. So we're going to be monitoring to see would it be able to stay above this trend line and work itself up toward this 14,500 area up at this zone, or would it encounter resistance on this trend line and get pushed back and start working its way back down to this 13,450 area. In the Dow Jones Industrial, we're monitoring Dow Jones Industrial to see would it be able to get above this 34,000 and come up to this upper edge of this balance area near 34,300, or would it continue to move itself down to this 31,727, these lows down here. And for the New York Stock Exchange Composite, although we got a nice pop last Friday, we'll still continue to monitor it to come down for this test of the 14,880 area, this high volume zone here, to see would it be able to find support, or would it move down to these lows here, somewhere around 14,500. And for the dollar, we did not see the dollar move too much after the FOMC announcement on the latest 25 basis point hike. So we'll continue to monitor to see would it break below this 100 mark here, this 100.80, or would it continue to move up back toward these 103.80. And here on the 10-year yield, we did see a little bit of an upward movement after the FOMC announcement the following day. So it's getting back to this 3.44 area. So we'll see would it be able to come up to this 3.6, or would it come down and take out the 3.3 and get into this low here, somewhere around 3.25. And for crude oil seems to have found buyers down here at 63.71. You see this tremendous reversal here on this candle on Thursday, and right now it's coming back up toward this 72.90 area. So we'll see would it be able to come back up and get above this 72.90. If it is unable to do that, then we could see a retest of these level down here below this 68 level. And for silver is trying to get back above this 2680 area. Right now, it had a nice bounce up until Friday. Then basically got a little bit of a pullback on Friday, but still stay above this 2528 level, this composite point of control. So as long as it could stay above this composite point of control, then we'd be monitoring silver to come up to this 2680 or that 27 level. But if it dipped below the composite point of control, then watch this 24 area, that 2450 area, and we might come down and test these this congestion area here near the 24. And looking at gold, we see gold got a nice pop on Thursday, but unable to hold a high, and then pulled back and came down to this 2000 level on Friday. So we'll see in the coming week, will gold be able to hold this 2000 and come down to test this 1975, 1980 area before it mount another push to come up here to this trend line here, somewhere around 2125, and possibly take out this high here near the 2157. Now let's take a look at Apple. Apple here, you see that on Friday got a nice gap up on here on post earning. And right now we're watching to see would it be able to come up to this pivot high here. And if it could get above this high, then essentially it is making a higher high. So if it could get above this 176.15, we'll be looking at this upper range between 178.50 and 177.80. Now, if it come down and fill this gap here, then we are looking at this lower range of the expected move between 169.30 and 167, and possibly this low here. And this Thursday low, or this Thursday gap down, was caused by Qualcomm reporting their sales was mainly being impacted by the low demand of the handset. So that was causing Apple to sell off prior to its earnings report. And as you can see, Apple did not have much of an impact on lower iPhone sale. So you can see that it popped up. And right now we're watching to see would it be able to get up to this high, or this is basically just a little bit of a last run and push up. So watch the next week's price action for potential reversal up here or for a continuation move up. And who knows, right? It could make a new all-time high, then it will really cause the market to blow off. So we'll see how the price action will play out in the coming week. Now, if you're interested in looking at the remainder of these FANG stock analysis, go check out my Substack page. I just posted the latest update on these FANG stock on my Substack page, and the link is smtraderca.substack.com. In summary, we are continuing to see internal weakness in the market. Although the large cap tech stock, especially Apple and Microsoft, are helping to hold up the S&P 500, eventually everyone that want to own these stocks will have bought them. And that's when we will see the S&P 500 and the other indexes go down to test at least the October 2022 low. Be sure to smash the thumbs up to help promote this video on YouTube. And if you are new to this channel, click the subscribe to subscribe. Thank you for watching.